Hello and welcome to Raghav's Take. Once upon a time, in an earlier century, a distinguished man wearing thick-rimmed spectacles called the dollar an exorbitant privilege for America. His name was Alan Greenspan, the chair of the US Fed. In those halcyon days, every country wanted the greenback. If India bought oil from Saudi Arabia, it paid in dollars. If Saudi Arabia bought cars from Japan, it paid in dollars. If Japan bought wooden furniture from China, it paid in dollars. America was not on any of these trade invoices, but the American dollar was omnipresent. Now, this mounting pile of dollars earned by non-Americans, these were very swiftly shoveled to New York to buy US Treasury bonds. That was the exorbitant privilege. Global trade happened in dollars. Global assets were held in dollars. America just sat back prettily, printing dollars and Treasury bonds to feed this insatiable appetite. American costs and interest rates plummeted. The dollar got stronger. And this egged Americans to gorge on cheap goods that were supplied by the rest of the world. Fancy dresses, cars, toys, phones, computers, all produced in distant lands by cheap labor in low-cost factories, sold at ever cheaper loans and prices to American consumers. But trouble was brewing in paradise. American factories were closing since it was so much easier and cheaper to import. Shop floor workers were losing jobs. Yet this cry of pain was at the fringe, drowned in ever more cheerful music, because ever softening interest rates and a forever strengthening dollar were fueling another frenzy: galloping asset prices, stocks, bonds, housing equity. People got addicted to what's called the wealth effect. It was almost a delicious double whammy, as Americans consumed with abandon. Yet they felt richer as personal assets shot up in value. A few people, as I said, were in pain. They were victims of globalisation, but most were in a heavenly bubble until it burst. September 2008, an overheated housing mortgage market crashed. Mainstream banks, insurance and manufacturing companies collapsed, and they had to be bailed out. Ironically, the US Fed printed even more dollars, issued even more bonds. Interest rates kept falling, dollar kept strengthening. Eventually, stock prices and consumption roared back to life, and the party started again. Until March 2020. COVID, the pandemic. Well, ironically again, new dollars and bonds were printed more furiously than ever before. Interest rates fell to near zero, but the dollar still did not soften. And before long, stock prices started leaping again. American tech companies, the fabled FANG, F-A-A-N-G, Facebook, Apple, Amazon, Nvidia, Google, also Microsoft, Netflix and Tesla, they became incredibly valuable. But now there was a new joker in the pack: inflation. Instead of consumption picking up, consumer prices took off, and they were bolstered by a COVID-disrupted supply shock and a COVID-induced, what's called helicopter money. The vicious twosome, that's job losses and inflation, they then combined to destroy the magic of globalism. The feel-good sentiment evaporated. November 2024. Into the valley of death rode a maverick, orange-haired savior. Donald Trump, real estate czar, showman, golfer, unrestrained by any public policy experience or academic qualms. He did not see any privilege in a strong dollar. In fact, he said, our dollar is too strong and it's killing us. For Donald Trump, it was an exorbitant burden. Manufacturing jobs had fallen by a third from their peak. America's share in global production had fallen by 40%. China could make 2/3 of the world's cars and over half of steel, aluminum, and ships. America trailed with just a fifth of shipbuilding and less than 2%, I'll say it again, less than 2% of aluminum capacities. And more troublingly, China held 70% to America's piffling 12% in the race to produce rare earth metals. In sector after sector, China had deindustrialized and hollowed out America. Now, of course, Donald Trump would have none of this. This is unfair. Our dollar gives the world financial trust and security. Our treasury bonds give them a safe haven. But we suffer. A strong dollar kills exports, gives us humongous and chronic trade deficits. We keep on printing treasuries for them, but run up nearly $35 trillion of debt on our balance sheet. American multinationals mint money by building factories overseas, but the American worker suffers. This is an exorbitant fraud, not privilege, against America. 2nd of April 2025, exorbitant tariffs. Most experts called it an exorbitantly hasty and destructive assault to lower the dollar and coerce manufacturing jobs back to America. But what followed is a 90-day pause for all countries except China, where an exorbitant trade war is in the offing. The outcome of that is perilously unknown. So, is it an exorbitant demise of the American dollar's fairy tale? Or could it play out better? Well, only one man can answer this question, the orange-haired savior. Donald Trump, real estate czar, showman, Mar-a-Lago golf championship winner, President of the United States. It's Donald's game now. He actually has a plethora of angelic options to resuscitate his roadkill, the dollar. He could revive American manufacturing in key high-tech areas by cloning his predecessor's Chips and Science Act, vigorously push a matrix of incentives, subsidies, and investment tax credits. He could stop obsessing about onshoring low-tech, labor-intensive manufacturing. That obsession is value destructive. It's not accretive. He could quadruple, 4 times, Joe Biden's initial $1.2 trillion infrastructure investments with a bigger Build America, Buy America Act. And this could be financed by a sovereign infrastructure fund that could issue American paper as an alternative to treasuries to foreign investors. He can use tariffs and hard diplomacy to push American arms sales on a much bigger scale. He could focus on America's $1 trillion plus of services exports, where America is a global leader, actually enjoys a surplus even with China. America's genuine strength is in designing and building modern high-tech services for the world. He shouldn't ignore or belittle that huge advantage. He could use the newfound tariff muscle to launch what's called the Plaza Accord 2.0, where key trading countries are, persuaded to allow a fast but sustainable depreciation of the dollar. Softened by these coercive tariffs, I'm sure they will play ball. Now, if Donald Trump takes these what I call angelic steps, the dollar's exorbitant fairy tale will continue. These demons of undervaluation, over indebtedness, lower exports, higher deficits, and manufacturing winter, they will all get slayed, surely, painlessly, certainly. Else it shall be what I call the exorbitant end. This was Raghav's take today.